Hello, ladies and gentlemen. This is Felix Thomas, your financial doctor, always ready to give you a financial prescription. Today, we are going to talk about dollar cost averaging. Okay? Now, what is dollar cost averaging? Well, first thing I have to say is that it's one of the greatest wonders in the investing world. No matter what you do, if you stick to dollar cost averaging over a long-term period, you are going to make money. It is bulletproof to the entire economy, as history has shown. Okay? Now, the way dollar cost averaging works is where whether the market goes up or down, you are still investing. Okay? And that would be preferably in an automated manner. So for example, if you are investing, let's say, $100 per week. Okay? $100 per week. Now, I'm going to address something here. Some people may think that $100 per week is a lot, right? But a lot of you all spend $100 a week just going to the bar, or probably even just doing your nails or your hair, right? Correct me if I'm wrong. I'm not bashing any of those activities. But if you have goals that are very important to you, and you know that first things comes first, you put first things first, okay? So in attaining your goals, $100 a week, that's only $5,200 a year, all right? That you're putting towards your financial future. Now, with us being in this pandemic that we're in right now, I can tell you right now, my clients and even myself has benefited a lot from dollar cost averaging, because we all saw how crazy this market went last year in 2020. Now that we're in 2021, things are looking up, but you still never know what could happen at any time because no one could actually predict it. So this is why the dollar cost averaging is actually going to help you big time. Now, another thing with dollar cost averaging, it helps you to eliminate emotions when it comes to your money. Okay? Eliminate emotions, because finances, money, all that good stuff is a very emotional topic. Just imagine, let's say you were probably a millionaire. Okay? You could be a millionaire, you could be a billionaire. Your money is going to have some kind of attachment to you, or you're going to have some kind of attachment to your money, right? No one likes to see that their $1 million portfolio lost 40 grand last week. 40 grand compared to $1 million is nothing, I agree. But to see that you lost $40,000 in a week, it is going to hurt. Now, with using dollar cost averaging, while the market goes down, the benefit that you're having is that you're buying the units cheaper. Okay? And as you know, with investing, the way you make money is that you buy low and you sell high, right? But if you're going in long term, all you're doing is you're buying for that period of time that you're in for the long term. So if you're saving for your retirement, you want to retire as a millionaire, the only time that you're going to be selling or withdrawing anything is when you retire. Also, if you're home, the only time that you're going to be selling or withdrawing anything with the money that you have set aside for your first property, or even your second property, third, fourth, it's only when you're ready for that goal. So when the market crashes, it is totally irrelevant to your goals, because at that point in time, that's not when you are ready to actually realize your goals. And it takes patience and discipline. And this is what the dollar cost averaging helps you with. Okay? The discipline that it actually has is that $100 a week fixed, it will get you there one day. Okay? I'm just throwing $100 there just to illustrate. For some people it will be more, for some people it will be less. Okay? But another thing that I could actually refer it to is, if you were to just imagine a loan. Most of us have had some kind of debts in our life, whether it be a simple car loan, student loan, or even a mortgage. That actually has the dollar cost averaging principle within it. Because as you know, the debts do get eliminated eventually if you're making more than the minimum payments, of course. But if you have a $10,000 debt, for example, and you're putting $100 per week onto it, you can easily calculate how long it will take you to actually pay off that loan, right? It would be about 2 years, because in 1 year, $100 a week is 5,200. In 2 years, that is 10,400. All right. Now, if you actually simply use that principle with your money, with your wealth accumulation, you are going to make so much more regardless of what happens. Now, I can hear already the people who trade stocks, or the people who trade cryptocurrencies, foreign exchanges, and so forth. Okay? I'm also speaking to you. All right? Your trading strategy is on its own, but also you should have a dollar cost saving strategy to something that is less volatile, that is actually going to give you almost a guaranteed return over the long term, which is almost any of the medium risk type of funds, or even the aggressive ones, right? You have a dollar cost averaging strategy into that, and it basically just sets a bulletproof type of financial success for you. I can speak for myself. Over the past year, so many people went into the markets speculating, trying to make a quick buck, because there was a lot of noise on the market, and all this noise moved a lot of stocks. A lot of people made money, and a lot of people lost money. Whichever category you fall into, if you have a dollar cost averaging principle that you stick by, that you stand by, that you don't touch regardless of what is happening, you are still going to come out successful with that strategy. Okay? Your trading strategy might not be successful, because statistics already show that 90% of people actually lose money on the stock market. Okay? 90%. So your odds of being part of that 10% is really slim. All right? Especially if you're just starting off, and especially if you are just going in for the short term. Okay? So I would like to hear if anyone has any kind of opinion on dollar cost averaging. If you tried it for yourself, what are your successes with it? What are your failures with it? And as you know, this is Felix Thomas, your financial doctor, always ready to give you a financial prescription.